Good morning, good afternoon, and good evening to those of you around the world. Welcome to the Trading Rebellion with Trade the Chain and Market Rebellion. My name is Nick Mancini, Senior Research Analyst at Trade the Chain, joined by my friends Monty and CJ, both Senior Research Analysts at Market Rebellion. We are here to break down all of what is going on in the markets. We have debt ceiling. We have AI-generated fake images of Pentagon explosions. We have MetaMask updates. Biden is taking on quote-unquote wealthy tax cheats, which includes crypto, apparently, considering we can't even do our taxes properly. I don't know how that is the case.
Secondary, who's he gonna tax? Everyone's broke now. I don't know what he's expecting.
And it's like if people paid their people paid their taxes. B, people paid more taxes than they probably should have because no one knows how to pay tax. So I don't know who's cheating the tax code other than, I guess, the people who have no money anymore. But that's another issue. So
while we're on this tangent, let me just say really quickly that I have an accountant, right? And he's been in the business for 40 years and he's been doing great work, very successful guy. I hand him my forms and he's like, I don't even know what the hell to start, like where to start with. Like, you bought NFTs that like you then moved over to MetaMask and then moved here. It's like, how am I supposed to, he's like, I just hope they don't. He's like, you should be good. I'm like, what do you mean should be good? That's not what I want to hear.
And in tax, Monty, those who aren't familiar, when a tax accountant says you should be good, it means you just paid more money than you should have to make sure that you don't get fined later down the road. So
I definitely did.
Exactly. So
I'm wondering what those Steam skins, those Counter-Strike Go skins. Right? How do you tax that?
No, you think it's a joke? I literally have to write down my tax identification number when I sell those skins. So that's not a joke. They take your tax identification number.
So Monty's all of his transactions for his accountant was Pepe Coin, 1,000 Doge.
This guy's like 70 years old looking at this shit, and he's like, oh my god, how am I supposed to decipher what? Like, he's moving it from an NFT to MetaMask to a CSGO skin to back to MetaMask to Bitcoin. It's like, oh my god. But anyways, enough pontification. The markets today, super interesting.
The markets are very interesting.
Price action.
And I think, let's start here just because I think this is going to segue into a lot of, I'm not even sharing my screen. So let's work on that. So let's start here because I think this is going to segue into a lot of our conversation. We're, of course, going to go over the crypto charts. We got CJ back today, so we'll definitely be talking about some TradeFi, some equities, some futures. But, whether or not you're trading crypto or equities, I think, you are very much aware of the debt ceiling negotiations and the looming risk that we have in markets. And just to kind of pull it back for a second, just to give you the last historical context in terms of when the U.S. government let the debt default, was the year of 2011. And we're going to pull up 2011 right now, and this was actually in our newsletter today. So if you are a subscriber, you will see this chart and a little bit of explanation around it. But peak to trough during 2011, we dropped 22% almost. And this is potentially what awaits us if the U.S. government or Congress, more likely, does not solve this issue. So where we're at now, it seems like McCarthy, who is the Speaker of the House, is meeting with Biden today at 5:30 Eastern. So just a couple of hours from now to continue discussions. No deal has been reached yet. The X date, which is when the debt will allegedly start to default, is June 1st, as per Janet Yellen. Goldman Sachs has the potential X date, all the way out to the 7th, 8th, or 9th of June. But the moral of the story is it needs to be done well before the X date because it has to make its way through Congress and Biden's desk to be enacted. So if it's on June 1st, if it goes through the House, Senate still has to deal with it. Biden still has to deal with it, which means the debt could default during that process, which would still be a major issue, even if they're in the process of solving it. So let's kind of pause there and bring Monty and CJ into the discussion. Do you guys have any information on this that you've seen that maybe we don't? What are your feelings in terms of a solution being reached? And then let's talk about, if a solution is reached, and then if a solution is not reached, how markets may react. So go ahead and kick us off, Monty.
Yeah, well, I have a feeling that this is going to conclude with, positive news. And I think that, we will see the market keep going. I mean, it's tough to say exactly when that, default is going to occur. I think it will occur, but, like you said, it needs to happen soon. We're 8 days away from June. And with those dates on the horizon, I expect to see some pretty weird things in the market leading up to these debt ceiling negotiations. And with this deadline looming, I expect to see some pretty weird price action. I think we're already seeing it today. Like if you look at the assets in the queues, for example, how often do you see the market seems very confused about how to react to this debt ceiling negotiation. The assets within the queues, we have let's say Apple's down today, Amazon's down today, but Microsoft's up big today. Nvidia is flat. Google was up big. So it's like a mixed basket within the basket. And that's something that you don't often see. And to me is indicative of market confusion and market uncertainty. And that's the way I'm looking at this debt ceiling negotiation, is that for right now, people are uncertain as to how it's going to play out and therefore are not trading with much conviction. So, not too much of an answer, but I think it explains a lot of the reason why we're seeing the current price action that we're seeing. And it could set us up for another, 10 to 14 days up until that deadline of some pretty weird and unexpected price action.
Yeah, and just to kind of take a peek and kind of build context to what Monty was saying, we've got NASDAQ has been ripping for, pretty much since the start of the year. S&P 500 has been doing pretty well. Both are up over the past week. But, interestingly enough, crypto is, flat or down over the past week as well. So, CJ, what are you thinking in relation to the debt ceiling? Do you agree with Monty that, we'll end up with, a fairy tale ending? And how do you think that, whatever outlook may occur, what's going on with the indices and also crypto?
Yeah, so I'm not particularly good at predicting outcomes of various events like this. So I really don't know what Biden's going to do. He does a lot of weird stuff, so I don't really know. What I will be looking towards this event for, and I think this is a good time to transition into some of my charts that I wanted to show about the NASDAQ, because I think this particular event could be lining up for a very interesting news failure. So as you can see from that blue oscillator, positioning in the NASDAQ is pretty interesting because we have large speculators continuing to get long up here, which means that for the first time in quite a while, we've actually seen a sell signal from the NASDAQ. We also have buy signals in the US dollar, which is interesting as well. Still a lot of people kind of short ES, which makes me a little bit hesitant to short NASDAQ just yet. But NASDAQ, you have to keep in mind, is a leader usually for a lot of these other indices as a result of having some of the largest stocks weighted a little bit higher. So it wouldn't be surprising to see the NASDAQ lead. But what we've been talking about for the past few months and what it seemed is we've been waiting for basically, retail and large speculator shorts to go back to a neutral level in the NASDAQ. They're now at not only neutral levels, but they're also getting long up here. So, I'm not shorting the NASDAQ yet because I don't have a reliable news failure or correlation failure just yet. I think the fact that the dollar's waking up is a very interesting factor in this particular cocktail. But let's say, for instance, we get, debt ceiling news that theoretically should be bullish for the market, yet prices closes down. That's an opportunity where I'd risk probably 100 basis points on a short, because that event in early June could be lining up for an interesting news failure, and definitely something that I'm going to watch. As for like the outcome, man, I don't know. It's I'm not going to try to even guess.
Yeah, and I think historically, trying to predict these outcomes, it's about as accurate as predicting the next presidential election. You really don't know
That's
until
a lot easier.
Yeah,
I'd say.
And there's risks on both sides. I think during the Clinton administration, the same thing happened, and then the Republicans ended up getting blamed because they were the ones, quote unquote, warring with the Democrats. So historical context does say that whoever, typically, then it doesn't mean it will happen, but typically the sparring party, meaning the minority party, will end up getting blamed for not making a deal with the majority party. But we'll have to see how that occurs. I think everybody is in favor of less spending to help with inflation, but nobody wants to see Medicare or Social Security or anything else become crippled and die. So
that's the one.
There's an argument to make on both sides here, but I think at the end of the day, nobody wants to see our debt defaults, and everybody wants markets to be a little bit more calm. And in my opinion, I think we probably will not see a melt up or down from crypto until this gets resolved. But I think just to kind of pull it back to equities before we start to dig into the crypto charts is SPY and the Qs are up during the whole, this has been in the media for the past couple of weeks, and now and equities are ripping, they're at resistance. CJ just kind of gave us an indication, but why do we think equities are reacting positively? Was it earnings that were inspirational? We did see, Apple had a strong demand from China, but we're seeing mixed, indications for Q3 and Q4 from a lot of consumer-focused companies, discretionary, I should say. We saw Home Depot get crushed. Maybe it wasn't Home Depot, but it was another, big home goods store. So we're seeing this, weird variation in markets, and just kind of bring CJ and Monty in. Any indication from you guys as to why equities would be moving higher in this type of environment? Is there anything that stands out to you guys, or do you think that this is just too many people are shorts and the market's, indicating max pain for those who want to get in?
Yeah, the market's a bit of a devilish beast in terms of punishing people and causing the max pain for the majority. I mean, it wasn't 2 weeks ago when we were talking about hedge funds being record levels of shorts in terms of speculators, and virtually all of them got squeezed out, at least in terms of the NASDAQ, if you look at that last week.
And I think John mentioned yesterday on the B3 show that John Najarian, who CJ and Monty work with, indicated there was a lot of short-term puts in the market. I think I remember him saying, and the puts out for a week or two max.
We also had the most call volume in NVIDIA in the last 10 years since 2014. So I don't really see that. I mean, it's a mixed bag, right? I think what you have to take from it is that, yeah, you had more shorts in the market. Everybody was bearish. And we did have fundamental things that forced those shorts to cover, like favorable earnings. And it doesn't always work that way. Like AMD had, they beat earnings and then fell by like 8% in the subsequent day. So I don't think you can really point to one thing or another. Everybody will always come up with an excuse after the fact. The perfect example is the debt ceiling talk. Nobody knew that was going to be bullish for the dollar or gold, for instance. But if you looked at the positioning beforehand and you saw that the risk to reward was tilted to the upside on DXY, everybody was short dollar. Druckenmiller's talking about how he's short dollar. And as soon as he did that, all the other small retail investors who watched that type of stuff followed him in on that short. And sure, that's, no one could have really predicted what the outcome of that event would have been. But the COT and the positioning data would have given you the optimal risk reward setup. And that's all that, the NASDAQ and ES have been showing since January. So to me, it makes sense perfectly why the market's been going up and why we've been trending.
This was when Druckenmiller announced, or when that headline came across, right? It was right around early May, somewhere right here. CJ?
Which article are you referring to?
Yeah, when Druckenmiller short, like the headlines were like, I think, first week of May, somewhere around here, somewhere around the lows, wasn't it?
Yeah, and you know,
And
this
now
is
and the dollar's
he
up
was
a couple
saying,
points.
you know, the media really ran with this quote of his. Like, you can't take Druckenmiller and just be like, oh, well, I'm going to short the dollar. Like, in a week, he could change his mind and it would mean nothing. It's just that I think
He could have
what he
he could have
said for
closed
that
the shorts
point was
already,
that,
and we wouldn't
you
know.
know, yeah, so like his main point, and I still believe this, which is why the dollar, I'm not opposed to it going to make, you know, new lows or even going to like 80, is the reason because like you look at these currency trends, you look at a lot of currency trends with like Swiss franc, British pound, doesn't even really matter what it is, but typically they'll go through these 3-year type cycles where you can usually play the macro trend quite interestingly. And that was basically what Druckenmiller was talking about. You look at the parabola of what DXY did all throughout, you know, 2020, you know, all throughout the bear market when it went parabolic. Kind of reminds me of Bitcoin in 2017 from a charting perspective. Bitcoin then, when, you know, we all know it made that massive descending triangle, which eventually broke down. I think that's a likely or even very interesting possibility for the DXY. But as of now, it's bullish. And, you know, that's because of positioning, in my opinion.
Yeah, this is a pretty big level as I'm trying to circle out here. We're sitting basically on top of support dating back to November of 2016, as well as March of 2020, which was, of course, just before the COVID crisis really started to take hold. So this is a very important area for the dollar. And I think just before I kind of move off of this, just another kind of fascinating indication is the dollar has been moving higher, for the month of May, as has equities. And so we're obviously not on a month chart, but equities for the month of May have been moving higher along with the dollar, while crypto for the month of May has obviously been moving. And I don't know why my mouse doesn't want to cooperate with me, but crypto has obviously been moving down. So, I don't think any of us, and I guess I'll open it up just in case you do, typically the dollar is inverse risk, and we've talked about this a lot, but obviously it will sometimes snap into a correlated stance and then, snap back into an inverse stance as well. So do you guys, just kind of final question, if it's a no, that's fine. But, we do often see this kind of snap back in terms of an inverse relationship to a correlated relationship. And is there anything that you guys are watching that gives you indication to follow the dollar for any of your trades? Are you using the dollar to be like, oh, it's moving higher, so I'm looking for shorts? Are you guys, not using this, or are you just remaining patient in terms of using this as a guide?
Yeah, Monty, just to this will be the last thing, then I'll let you go. I know I've been talking for a little while here, but
You're good.
I'm fired up. This is an interesting topic in terms of positioning, especially the dollar, since I've been trading it around gold.
Next, we're going to talk DXY and cattle futures correlation. Don't worry, guys.
Yeah, that's been a horrible.
Ahead,
that's been a horrible chart, and just cattle futures in general. I think there's hedge funds like in billions that are purposely spreading diseases to eradicate the cattle.
Those are all subsidized markets too, CJ. Let's not act like that's a 100% free market either. So
I'm just joking around. So,
but go ahead.
Why did the dollar and S&P go up in the same week? How is that even possible when the past 2 years they've been completely inversely correlated? And in my opinion, it's just because we had the debt ceiling talks that forced a short squeeze in the US dollar, and we've had shorts continue to get squeezed out. I think probably a lot of people tried to short Nvidia earlier on, ever since it's gone parabolic. Like I said, you've seen a lot of call volume. But in terms of the dollar, Bitcoin, in my opinion, it's still correlated, or I should say inversely correlated to the dollar. Bitcoin has been doing the opposite of it. But in terms of equities, you just have to look at positioning. And typically when I would, if I ever put two trades on that are kind of risk on or risk off categorized, I'll do it based on positioning. And sometimes you can get lucky where, you'll be wrong on one trade, but, the other trade will work out because of the positioning and risk reward favorability. But in this case, very rare case, both of the trades actually worked out because the positioning was just so skewed in one direction, and you actually had that news event with gold and with the dollar. And the other interesting thing in terms of positioning and crowded trades are ZN, or just particularly bond futures
Do
in
you want me to
general.
bring your chart up?
If you just type in ZN, you'll be able to find it. It's just a 10-year futures note, but that one's very crowded, more crowded. Actually, you know what? I do have a chart that'll show the. I guess we might as well hit them while we're talking about them. So yeah, when you look at 2-year notes, look at how much speculator selling there is in terms of the blue. There's more. That's the most open interest in shorts we've had since 2009, basically, even more so. And that's very interesting. Last thing that's kind of random, but I also think is worth talking about, and something I showed Monty this morning, was Barron's coming out with an article saying stocks the case for optimism. I'm really happy they told us that now that the NASDAQ is up 15% in the last few weeks. But interesting how that works, isn't it?
Yeah, it is interesting how it works. And, to get back to the DXY, like how can the DXY be going up while equities are also going up? I think the answer is actually pretty simple. What it tells me is that this is not genuine strength that we're seeing from the equity markets. Now, you might say, Monty, what are you talking about? Genuine strength? Price is going up. Like, what does it matter if it's going up or if it's going down? Like, what is genuine strength? This to me is an echo bubble. Since January 1st, traders have tried to short the shit out of this market and have failed miserably. And as a result, price has gone up. That is much different than a genuine bull market in which people are speculating and taking their actual, hard-earned money and putting it into the stock market. That's not what we're seeing here now. Now what we're seeing instead is puts getting crushed. This is despite the fact that price has risen so significantly in the month or in the year of 2023. People are still talking about this being a bear market. It's like, no, this is an echo bubble. And when I refer to genuine strength, I refer to what we saw, back in 2020, like right post COVID. There were people injecting lots of capital into the space. And that's why you saw the DXY falling and, the NASDAQ going up. That correlation isn't as tight when the strength is not as quote unquote genuine as I put it. So for me, that's really what it's all about, is the fact that this rally that we've seen across the board has been on the back of bearish sentiment. People are still overwhelmingly bearish, yet price goes up. So, that correlation between the DXY has been a correlation failure.
It's a good point. I don't know if I'm, the relationship with DXY is an interesting one. And I do tend to agree with Monty. It's just one of those things where it's the biggest head scratcher, I think, on the market, especially, and also relation, yields in relation to equities price action as another big head scratcher as well, in terms of, the typically inverse correlation, sometimes correlated relationship as well. So I think the moral of the story here is that no matter what you're using for a weather vane, meaning, what's kind of the, where's the wind blowing? Where do I want to point my momentum trades or my swing trades? The biggest lesson learned here, I think, is just always double check your bias. If you're using something that's been working for a week, triple check it when you're using it the next week. So just make sure you're not getting caught off guard and you're, I'm balls long because DXY is going down or whatever. Plenty of us have been there because we're so confident that this has been working day over day, week over week, and then on the all of a sudden you put in 10x your usual trade amount because you're so confident, and then you get whipsawed back. We've all been there. So I think that's the biggest takeaway.
The beautiful thing was, like, obviously I was never on the floor, but like I've heard stories from folks. Like I remember my dad telling me, he'd be like, yep, you'd see the guy who would trade 1 lots and 10 lots, then he'd put on a 100 lot position and he'd be all sweating and nervous. And you could tell he wasn't going to make money from the onset of the trade because his mind was not objective or properly in it. And I don't know. I just find it fascinating. You could like literally see the person sweating and just doing the opposite, just do the opposite of them.
I know it's every time. Like you get 9 out of 10 trades right with your with your regular unit size, and then you're like the 11th trade I'm going up 10 units. We're gonna make the vacation for the family on this weekend, and then it's then it kind of falls flat on your face. So slow and steady wins the race. We can definitely take that fable into real life in many different ways with trading. But let's go ahead and move it over to crypto. We'll probably dive back into equities to dig into a little bit about what we're looking for this week. But obviously, a lot of it will pertain to the debt ceiling issue and whether or not we inch closer to a resolution or lack thereof. But I'm going to pull up Monty's chart in a second. I do want to preface before we dig in, because I know Monty's been on top of both Ethereum and Bitcoin over the past several weeks. Well, really, past several years. But since we've been talking, ETH BTC, which we mentioned, before many times, has been forming this ascending triangle since the first week of May and is now just trying to maybe break out. So I think this is going to, be a really good conversation starter for us, Monty. And then I'm going to bring up your charts right now, and I'd love to get a little context around what you're thinking, because it does seem like ETH is ready to battle back against Bitcoin for some good volatility. But what are you seeing?
It's so funny. You know me very well, Nick. That was the next chart I had ready to bring up, was the ETH BTC chart. And of course, that is most definitely worth noting. Whenever we see a break in that flow of capital, just like we just talked about with these correlation failures, right? What you would typically see is Bitcoin being down the least, ETH being down, the second most, and then the altcoins being down the most. That's what you'd expect to see on a down day for crypto. That's not what we're seeing here. ETH is showing signs of genuine strength. And one thing we talked about last week on the show, Nick, was the fact that, when given the opportunity to unstake their ETH, there was basically no exit queue. No one was looking to unstake their ETH. So people are
really quick. Actually, I can pull that up for us.
Yeah,
so
right.
as of today, 66,000 people waiting to enter the queue. Not a single person waiting to exit. So if you want to earn your validator chops, you got to wait over a month if everything goes to plan. So there, it just updated. Yeah. So 35 days, 19 hours. So back to Monty's chart. But yeah, I mean that context is crazy.
Yeah, that is very, very important to note, because that's indicative of people wanting to not only like, if you can see that demand is happening right now, but you can also see that there's demand in 30 days, that's information that you don't find like anywhere else. But with this information about validators entering and exiting, we get sort of an idea of when exactly like when the demand could plausibly come to an end, or how much demand there exactly is. But getting a little bit ahead of myself here. I got excited because you brought up that chart. Let me talk about Bitcoin first. Okay. So this is the 20-period smooth moving average. And for me, is my favorite for defining trends. And it's really rolled over here hard, and we're consolidating, around this 27K level, just below it. But what I've always, joked about on this show is that I don't short Bitcoin. I hold it for the long term. Regardless of the negative price action. Sure, I protect my position with BITO puts. Oh, and by the way, real quick, let me give a shout out to CJ. I know he'd never toot his own horn, but Tesla, I'm pretty sure he was saying it to buy.
I sold it at the 20 smooth moving average.
Oh, okay, never mind then. Never mind. No credit to you.
Yeah,
never mind.
I blew it. It's all good.
Damn, you just yanked CJ's trophy away from him.
I've heard. I was trying to give him credit. My intentions were good. He could have just taken the credit. But that's the type of guy CJ is.
Honest guy CJ. He's never gonna lie to you, and that's what matters.
Right. But okay, so like I said, okay, I'm not going to be shorting Bitcoin. I'm holding it for the long term. Now, I do protect my position with BITO puts. We talked about that last week. That's not what I want to talk about today, though. What I want to talk about today is the altcoin market and which coins I specifically will be looking to short here if we do start to see negative price action equities, and that translates over to negative price action in Bitcoin, which I do think would be the case. So with this moving average rolling over, I think it's time to start thinking about where you'd want to go, what assets you'd want to go short in, where you'd want to go short, where you'd want to cut it, and that sort of thing. And one thing that I will just say right off the bat is so many tokens that are heavily traded, and this goes along with like the theme of kind of contrarian trading that we've been talking about in terms of like the echo bubble thesis and why we've seen positive price action this year. But some of the altcoins that have shown, ridiculously positive price action are things like, let's look at the render chart. Okay,
Dude, that blow off top was crazy over the weekend.
Yeah.
So yeah, look at that.
Like look at this from a daily perspective, right? Like this one was one of the most popular shorts in the market. Very prevalent on Twitter. So many people talking about this move not being sustainable. And this red candle here was their signal for entry. Ultimately, they got squeezed, and you can tell, like, when you see a wick like this that goes exactly up to like $3 pretty much, they got squeezed hard. And this isn't the only example. There are many other examples of assets that are popular on Twitter and have been, talked about as some of the best potential short plays, actually kind of squeezing us to the upside. And we're seeing that today with something like CFX, right? It's showing signs of positive price action. It's outperforming Bitcoin. And, quite frankly, I think it's a pretty crowded trade. So what I'm going to be looking for is assets that aren't crowded, assets that have been slowly grinding down. And I think one great example of that, ironically enough, is something that I use quite often, is Uniswap. Uniswap is nearing a breakdown level here, and
looks like FTX just opened perps on Uniswap.
Yeah, right.
Anyone gets that reference.
Look at this. Look how close we are to breaking down below this, critical $5 level. We are right at it. We've seen relative supply absorption below these levels, but as we trend down and with the negative context of Bitcoin and equity markets, I see us breaking down here. And ultimately, there's really no support until we get all the way down until about the $3.50 level. I would cut my trade a little bit before that to, stop myself, from getting front run by other traders. But essentially, I'd look to take profit around 3.75. And this is a really nice setup because you can just cut it if we move above that moving average there. So, cut it here, enter here, and take your profit here and laugh your way all the way to the bank.
I like this trade. Another one that I was watching that looks a little bit similar to Uni is pull up the ADA chart. Also, I wouldn't say it looks as bad as Uni does right now, but it is definitely beaten down. And if it's, we've got that good target down to 30 cents. Certainly if it falls below, I think 35 cents. So that was something that I was watching. I was actually in an ADA short from, I think, Thursday through yesterday. Closed obviously before we zoomed on that squeeze this morning, because my initial target was around 35 cents and obviously saw that wicking just below 36. But definitely watching for a break below 35, because definitely would like to grab that action down to 30 cents if given.
Yeah. But one last thing that I just want to get across, like, I know people might not love the idea of shorting Uniswap, but that's why I love it, is because people like Uniswap, and you're not going to get those same short squeezes that you get in the overly crowded assets that have no utility and that aren't being used. I do think that Uniswap will be around, for a while. I don't think it's necessarily going away in this market cycle like we've seen other assets, just completely come and go. I think, Uniswap has survived as long as it has already since 2018. I think it can plausibly continue to exist for another 10 years. But my point is that an asset that people like right now and that they fundamentally think is solid is actually probably one of the best short plays, because you're less likely to get squeezed out because it's less crowded. So that's why I'm in or waiting to enter this Uniswap position if we do break down below this critical $5 level. Of course, not financial advice, just what I will be doing if we do hit those levels.
I
I
like it.
think
I like it.
that
Go
Monty,
ahead,
you
Steve.
make a good point. I think that one of the things, it's probably not the greatest misconception, and something that kind of I've could have done better, was just shorting something because it's gone up a lot is not necessarily, I think, the safest or wisest move. You can catch the initial blow off top. Let's say it drops, 14 or 20%. That's nice, but you're much less likely to get those squeezes when you're in something that's much more like low key, in my opinion. And I think that's very important. Monty makes a good point. So if you guys want to hit anything, feel free. I just have one more chart to show, but other than that, feel free to
Yeah,
move on.
I wanted to pull up the LTC chart just because there's been a lot of chatter around Chikun, as they call it. And for anyone I love that meme so much. I just like to say the word Chikun. But apparently it's the Asian traders call it Chikun because it is a flightless bird. And I think that is just really funny, because I think that is just the perfect moniker for LTC. It really is, a flightless bird. It really, even during the 21 pump, still couldn't assert its 18, 17 pump as well. And even on this rise, it's still been stuck underneath this 1 week estimated 200 moving average, and has been fighting for quite some time to break above it. So I just wanted to quickly go over this, because I know a lot of people are trading this due to the halvening that is upcoming. And if anybody knows, the halvening in relation to Bitcoin, typically a bullish catalyst, and seems to have been somewhat of a bullish catalyst for LTC as well, considering it is upcoming. But getting stalled around, we get a big stall, just above the $100 level, can't break above that. So now it's getting stalled at the $95 level and can't break above that, but is still on what I would consider to be a pretty ugly bullish trend that's, somehow still intact, despite, shorters efforts. So do we see anything on this chart that looks attractive? Do you guys still think that the halvening trade is still valid? Or, of course, with this overhang of the debt ceiling and, flat to ugly crypto trading, are you guys ignoring this and thinking that the quote unquote pump has already come and gone in relation to the halvening? I'm kind of torn, and I would like, personally, before I let you guys go, I'd like to see us get above 95. Then I'd probably start looking to 103. But if we break beneath the VWAP with any sort of convincing price action, then I'm probably going to start looking to short it back down to 85. But what are you guys looking at? And if you're not tracking it, totally fine. But would love to hear your thoughts, because this has been a popular coin lately.
Yeah, I think we were talking about it today on our show. And we're last week we talked about this exact subject, about whether or not we think, the halving will be a positive catalyst for Litecoin or not. I think we've seen the majority of the positive price action in relation to the halvening narrative. Litecoin is not Bitcoin. It's it's not the same. And those levels that you have drawn out there, Nick, from a technical perspective, I think are, exactly what I'm looking for. If we break above that level and plausibly start grinding back up towards the local highs, then maybe we do break into new highs, running into the halving. But ultimately, the fact that we've seen 4 or 5 days here of like somewhat negative price action, and we're kind of just consolidating below that level and failing to make a new high, to me it just looks weak. And even with like a narrative, I think we could most definitely see a narrative failure when it comes to Litecoin and its halving.
And just so everyone's aware, the halving date for LTC is currently expected to come on August 5th. So there's still quite some time. But, historical price action does seem to indicate, bullish price action up until the halving date. But I do agree with Monty, as markets continue to mature, as more participants enter the system, as more cycles continue to pass, there will be less effect on the next cycle from what you expect, in comparison to the previous cycle. So just something to be aware of. Just because it happened before does not mean it will happen again. And typically, markets work in cycles of 3 or 4. So just something to be aware of. Not saying that it will or won't happen, but just something to be cognizant of. And just along with any trading is match up your levels. Just because the halving is approaching doesn't mean you click green buttons, without any regard. If you're not in from obviously the lows in early May, it's probably a decent idea to remain, conservative at resistance. And considering we're just hovering between resistance and the VWAP, that's definitely something to continue to track. So, but I think CJ, you said you had a couple other trades. We can kind of bounce back between equities and crypto. We've got some skills like that. So is there a chart that you wanted to pull up?
Some skills.
A few.
But yeah, I just wanted to mention equity put call ratio real quick, because there's been a pretty staggering move since last week. Do I have my chart shared, or?
I'm not seeing it, but I can pull it up as soon as you share it.
My bad on that. All right, should be good now. So yeah, this is ES, and then we have, I'll just go to the full screen mode so you guys can see it nicely. These are equity put call ratios, both in the Qs as well as E-minis in terms of ES. And so each time we've kind of hit the 1.2 level, up here, this is when you see a lot of puts getting bought, 1.2 puts for every call that's being bought. And, we've seen the major spike right here, over in December. And so we've seen 2 local bottoms correspond with everybody freaking out and buying puts. And the interesting thing is we've also seen somewhat local tops in terms of when we've reached the 0.8 level, and when people are buying a lot more calls. One of the stats we mentioned earlier was around Nvidia, and they've had the most call volume since 2013 or 2014, I believe. So, we're creating like decade long significance in terms of trends.
And then just to kind of make the point there, that's likely because of the AI revolution, right? Everybody's thinking they need high powered chips to power all these robots.
I mean, yeah, whatever. You could say that Bitcoin was going to be, the world reserve currency in 2017, and it went to 20. Who knows, right? Who knows? Perhaps, but yeah, that seems to be the narrative on Wall Street. Another thing that Druckenmiller had said that seemed to garner a lot of popularity and interest was that he's long Nvidia, or at least he said he was as of like 2 weeks ago. Obviously, I don't go out and buy Nvidia. That's not what I'm saying, but he's like, I'm not even sure it's clear to me that during a recession, something like Nvidia would go down, because if you still need that demand for chips and AI, perhaps you have some type of, kind of unicorn similar to like buying defense stocks in the 70s when, we were doing Charlie Wilson's war and all that stuff. So anyways,
well, I guess,
yeah,
I just to kind of
put call ratios, because they are, pretty high. People are finally starting to buy calls and come around into like the FOMO of this bull market, or this, I shouldn't say bull market. Monty will get mad at me after that rant he went on earlier, but this echo bubble. Yeah.
Yeah, and I think just to maybe give a little bit of explanation or kind of just continued thought to the Druckenmiller comment is, I guess, if you're expecting unemployment to rise or humans to be replaced, and even in a recessionary environment, if robots and AI can replace those jobs, seamlessly, which is kind of the big issue of what is seamless in that type of environment. In a recession, if you're removing humans, but you're adding value that is extremely low cost, that's potentially a bolster to the business, where even if you are in recessionary conditions, because potentially margins improve or something like that. I don't know. That's way deeper into the accounting books and the operational structure of these companies, but I can see what he's saying in terms of general market impact that will happen, slowly over time, like a month over month, year over year type of deal. So that's something to just at least give thought to if you are a long-term investor. Companies that can potentially replace a lot of their population of employees with AI seamlessly and still create business value, obviously saving capital and creating value in the market, which is what increases prices. So that's I think we'll be talking a lot about that in the future. I would not be surprised if we're still talking a year from now, a company, announces a huge shift in terms of their working population or their business operations in terms of implementing AI versus human capital and how it's going to impact their balance sheets in their revenue and profits. I have a feeling we'll have that conversation sooner rather than later, which is scary because, is there going to be an AI Monty and Nick that's talking to you guys like some, Wizard of Oz type stuff in the future?
I hope so. Then we can go on vacation and everything's fun.
Hey guys, AI Nick here. Nick's in Barbados, soaking up some sun. So, but let's move back to the charts. I think that's what people are very much interested in. So,
I got one little nugget that I've been saving for this show, if you wouldn't mind, real quick, that I would like to share. And that is this asset here, QNT.
What happened to this? I remember that big boost in October. And
right?
It was like, why?
Yeah, I know. Everyone was really hyped up on this. This was around the theme of blockchain interoperability. That was the big theme during this period of time, if you remember. And we had, all these various layer ones occurring, and blockchain interoperability became a big theme, a big narrative in this market. But looking at QNT lately, look at how much. So we already looked at the render chart. We looked at the CFX chart. Look at how slowly this thing is grinding down. It's just slowly grinding down. Very few squeezes, not getting above this 20-period smoothing average basically whatsoever. And below this level, below this not only technically critical level of $100, but also psychologically critical. Like as humans, we tend to, put significance on round numbers. If this level falls, I see this thing going to its lows of $40. And what's interesting about this is it's kind of a two-way trade. And that's why I've been saving it for this show, because I know you guys kind of like to be able to trade in both directions. So I think this thing bleeds out to about $40. I think that's where we bottom out. Now, one thing I will say, even though I'm not particularly bullish on the theme of blockchain interoperability and its future going forward, this is one token that you won't see this very often. 81% of its circulating supply, or 81% of its total supply is already in circulation. Its max supply is 14 million. It has 12 million tokens in circulation currently, meaning that no more than this max supply will ever exist. And this amount is already currently in circulation. So I think that sets up, it's some interest merely just on supply and demand. an interesting pump during the next during the next bull market, excuse me, if we do get it. That's a long ways away. I think this thing slowly bleeds down to $40 when the market's ready to rally again, whenever that time may be. I do think this is going to be one that's plausibly a good buy purely because of the tokenomics and the max supply and the circulating supply being so close. Most altcoins that we talk about and deal with are facing massive dilution from whether it be from companies and VCs that invested early and are able to sell at lower prices because they got in so early, or just the supply schedule of the token itself. But this is a token that has only 2 million left to be put out into circulation, and that in itself could potentially be a bullish catalyst. So I'm gonna let it bleed. This is the metaphor I'm gonna go with. I've been watching Dexter, so maybe it's a little macabre, but I'm gonna let it bleed a little bit. Let it suffer down to the $40 level, and then I'm gonna come in with my capital and I'm gonna tourniquet the wound. I'm gonna save its. I'm personally not gonna save its life, but I think down there, its life could plausibly be saved. In the meantime, I'm standing back and letting it kind of grind down because I think that's where the market has.
QNT is not a child predator. It's a good coin. It's worth saving. That's what it sounds like. Monty's not taking it out behind back. So
Monty the market's parasite. Love it. There's actually a very strong community around QNT. I like that. Although the blockchain interoperability thing, those people, they told me that. That's what I heard on Adam.
That was I think 2021 was a big narrative. Fly. And I think interoperability will still be a big narrative, but the chains have to work there needs users on one chain to then move users to another chain. But we can get into that later. One thing I do want to mention in relation to what Monty said is inversely, if there's any coins that you're thinking about buying long term or longing the crap out of, if the circulating supply looks the opposite of QNT, meaning there's only 20% of coins circulating out of the 100%, and you're buying that for long term, I would think differently about that decision, because just basic economics, you're in any economics 101 class, the first thing you learn is the supply and demand chart. When demand is constant and supply increases, prices go down. It only will that work if demand is increasing at the same rate as supply is increasing. So, or decreasing, or I'm getting that mixed up a little bit. You guys get the picture. I'm getting a brain fart, but we understand what this means. If there's less supply, probably best to not make it a long-term buy. And I guess that rhymes, so you can kind of take that to your kids or write it on your fridge or whatever. But Monty, it looks like you want to hop in here.
I just wanted to say, we saw that so much in 2021, and it's fair, right? People are distributing into market strength. That's what you are supposed to do as a good trader, right? But people are buying these tokens and they're wondering, why is price not going up? There's demand here, but what they're not realizing is supply is increasing as well. So even with demand increasing, if the supply is being diluted, which in many cases, I recommend going to Masari and looking at their website. They have great information on token supply schedules that you can look at, and you can see exactly when these tokens will become unlocked and be put into circulation. So sometimes demand is not enough. Sometimes you need the supply to be constant, and that's not the case with many tokens.
And can you please pull up that lovely comments about Cardano that we have?
Yeah,
very accurate.
We do have some Cardano fans.
Look at all the biggest projects like DOT, Near, Cardano. They haven't performed well. The smaller, newer stuff has beat it.
The argument will be, Cardano pumped in 2017, it pumped in 2021, and yes, it did. And not saying that this science that we're saying is perfect, but at the end of the day, I think you can pick better coins based on what is, the supply availability versus, other coins. So it's another kind of guide to help you, check your boxes and be like, long-term hold, good supply, good demand, they've got updates, they've got a good team, they've got good the cash flow. So these are the things you want to look for projects, just like investing. At some point, we'll be looking at the crypto market based on, revenue and market performance rather than speculation. CJ, maybe we won't.
We have yet to see that.
That's the long-term goal here. So we'll still make those comparisons, and I'm sure there will be a coin with 1% supply that does a million X that, someone will laugh at us about. But, at the end of the day, we are still winning in the market and have been around the block a couple of times. So with that being said, we are bumping up towards the end of the show. We'll probably go over one or two more assets before we leave. If you do have an asset that you would like us to check out, we will certainly check it out for you. A couple of the coins that people have mentioned ended up being great trade opportunities. So we would definitely love to see what you guys are looking at. We'd love to help you out with one or two assets. So please throw that in the chat if you want that discussed, and we will. But one of the final coins that I figured we'd check out is Pepe. And that is because I believe the statistics were it was the fastest meme coin ever to reach $1 billion market cap. I think it beat Doge by several, like tens of days, maybe 100 days, something like that. But I mean, very crazy price action. And now we've done, basically and I don't know why my mouse is malfunctioning today, but we've done the crazy 70-80% price drop. So I think 76% peak to trough in terms of the recent cycle. And now we're, of course, hovering above the, I guess we'll call this, 140K sats or 140K something. But what are you guys thinking for Pepe? Is this I know this is kind of, there's no fundamentals or anything, but in terms of trading opportunities, it's still, still giving. I would think that was a 20% move over the weekend. 22%. So I mean, anything to glean from here, because although I'm sure we aren't trading this much, the crypto market still is very much interested in Pepe. So figured we'd at least talk about a meme coin and give people a couple smiles before we head out.
I think that last point you made, that people are still interested in a meme coin, is a very important one. And also the fact that it was the fastest to reach $1 billion is also very important. I guarantee you this, and this is here we go. I guarantee you that at some point in time in the future, there will be another meme coin that will come along that will reach $1 billion market cap faster than Pepe. That's a guarantee. And you want to know why? It's because it's like playing the lottery. People saw people get rich buying $10 of Dogecoin and turning it into millions of dollars. And like, think about the lottery, right? It starts small and then it gets bigger and bigger and bigger and bigger. And you hear like, the lottery like is now a national like thing. Like the Illinois State like runs the lottery. Like,
Monty, I hate to interrupt, but this is so on point with what you're saying. Like I looked at a lot of stats in Taiwanese day traders in the 90s and then Korean stats recently around cryptocurrency. When markets get lots of volume and you see those types of moves, the open interest, I guess you would call it open interest, but the popularity of lottery tickets actually goes down. So there's an inverse correlation there. It's the same people. Go ahead.
I mean, wow, that's crazy that you had that stat on hand. I was not prepped for that, but yeah, that's what it is, right? People, the psychology of trading is that, you hear the stories on Twitter. You only hear the positive ones of people turning, $100 into $1 million. Like, oh, great, that happened. Good for you.
Yeah, the bot and wallets buying $25.
Yeah, right.
5 minutes after it launched.
For every one of those, there's 1,000 people who bought the top and were forced to sell. That's the way that it goes. because the people at the bottom are able to buy so much of the supply because it's so cheap, and then able to distribute at the top, that the buyers at the top, there need to be a lot more buyers than sellers in order for price to keep going higher, to basic economics. Now, what I think is going to happen is that, people are going to keep seeing these stories, and in the future, they're going to keep buying these lottery tickets, and the lottery is just going to grow and grow and grow. And, the next meme coin will reach $1 billion even faster. Which meme coin will it be? I don't know. That's the lottery aspect of it. That's like scratching the ticket. I don't know if it's going to win or not. I don't know if they're going to call my numbers on the lotto ball. But what I do know is that someone's going to win, and that someone's going to make a lot of money, and that another altcoin will beat Pepe to $1 billion. So it's like, that's the psychology to me behind it.
I definitely agree with Monty. And this is another reason why a lot of people are bullish on another crypto bull market. And we've talked about this very much before, is greed is always apparent. It's certainly not going to go away anytime soon in this late stage capitalistic world that we live in. We're getting to Mad Max out here, and it's certainly only going to get worse. So, it's funny to say, but Mad Max may not be too far away. But at the end of the day, greed will return, and this is a market full of opportunity. And when you have the right operational dominoes that fall, meaning the right amount of liquidity, the right people entering the space, the right type of marketing. We've seen this, really twice majorly, and 3-4 times before, talking about Bitcoin and Ethereum cycles. It will return. And, if we look at global central bank liquidity prices, nothing is ever so simple that you can just look at the central bank liquidity chart and be like, markets will go up. But history tells you that, the more central banks are spending and the liquidity they're injecting, markets will go higher. And there's a lot of risk to be taken and a lot of profit to be gained. So definitely agree with Monty's standpoint in terms of markets coming back and new shiny things, taking people's attention as well. Traders definitely have the attention span of the dog from up. We all know the squirrel. That's pretty much CT. So, and I'm part of it. So is Monty. So is CJ. We get distracted, but obviously we're here to decrease the amount of distractions. So, what I would say for Pepe is, if it does not launch again at this 150K level, if it doesn't do something like that, then it will continue to drop similar to QNT down to the 137K level. And then, of course, if that's broken, then we'll do a little bit of a similar event to what we saw down here. So would not be trading Pepe with too much capital, but if you do time it right, there's some really good opportunity. This was a 20-something% move that could have made or break, made your week. And if you think about the trade from a general consensus, your stop would be underneath, this level right here. And you're obviously trying to take all the liquidity up into this next level. So if you are trading again, if you get a nice opportunity down to this level, your stop would be very tight. You wouldn't lose too much on the the bad ends, and then you could possibly trade it back up to the top end of the range. So just an idea for Pepe, but I will probably not be risking too much on that. So CJ, Monty, does not look like we have too many people eager for charting today. So I think we can go ahead and wrap things up. Are there any final notes that you guys wanted to leave us with today?
I don't think there's many big pitches out there to swing at right now. It's May, low volume, not a lot of volatility. Obviously, there's been a lot of opportunity in the equity market, but yeah, I just think it's still kind of a tough time to trade, especially with the lack of volatility in BTC lately. So no rush to really take any massive bets right now, in my opinion. I think that there'll be a lot better opportunities later on in the year, probably Q3, Q4, for periods where we have lots and lots of volatility with things that I think I'll be able to have a lot more conviction in. I just don't really have that much conviction in really anything right now. So I'm kind of trimming my size and just kind of being cautious and trying to do as little as possible, but I'm kind of a junkie, so I can never do nothing. But anyways, go ahead.
Yeah, all I got to add is, think about everything we've talked about today, all the narrative failures, correlation failures, like all the uncertainty in the market. Like CJ said, there's no big pitches to swing at. I think patience is key in this market right now. I know it's not ideal. It's not what everyone wants to hear. That being said, there are still opportunities, some small ones like the ones that, we mentioned here today that are worth taking. And if you want to hear more about that, you can check out CJ and I over at marketrebellion.com/try crypto. We're there pretty much 24/7 talking crypto with our community. But yeah, that's all I got for today. Thanks everyone for watching. Nick, I'll pass back to you.
Yeah, for sure. And I think just to wrap it up, in my opinion, I think we will not see any good volatility, whether it's up or down, just, actionable, good opportunities for maximizing trade potential. Feel like that will probably not come until the debt ceiling issues are resolved or reach, critical mass, meaning we're in default. So if we're in default, we're probably maximizing opportunity on shorts. If it gets resolved, maybe we get a nice little squeeze and kind of remove all of the shorters that have been stacking up. So I'll be keeping a close look for that type of news to then stack some trades up. So, but like CJ Monty said, we're going to go ahead and get out of here. We do this every Monday and Thursday. Like CJ and Monty said again, definitely check out Market Rebellion at marketrebellion.com/trycrypto. I think it's only $1 to get started with those guys. And then on the other side, if you'd like to try Trade Chain, we got 14 days free. And a lot of both of our services are very complimentary, both fantastic communities. And I think you should, definitely check both out and see what works out for you, as I found both to be very beneficial to my trading style, as has CJ and Monty. So we will see you guys on Thursday. Good luck, happy trading, and see you later.